Hello friends and welcome to my video diary, Fit and Wealthy. Being fit and wealthy is my dream state. Here's what happened. I've wanted to become fit and wealthy for a long time, haven't we all? But I've never actually followed through. I've been muddling along. I've been doing 80 to 90% of the things right. I've been doing the workouts to get fit, but then self-sabotaging with not following through on the other aspects of workout, like having a correct diet and having proper rest. As for investing, I have been doing this pretty much all my life. I've been working in this field since graduating college, where I did study accounting and finance. So this is my bread and butter. But I haven't followed a strict investing schedule. I've been investing when I felt like it and never following a strict regimen. This year I decided to change it and start this video diary to keep track of my progress and also keep me accountable to my set goals. This year, I decided to really level up my focus, set up new routines to achieve my set targets, to get fitter, and also do a lot better when it comes to investing and growing my money. I intend to release a brief update on my training regimen, the things I've done that week, followed by sharing my investment portfolio and the progress I've been making throughout the week, followed by doing a deep dive where I will show a stock and do analysis, provide rationale why I have picked it. So my hope here is for the viewer to also get something out of this. I hope this video diary helps you achieve your fitness goals and hopefully also achieve better investment results. Let's get right into it. This is my first recorded video. Over the past week, I have managed to exceed my stated target goal of 300 intensity minutes. That can be achieved through a combination of workouts, whether it's in the gym or cardio exercises like running. Think of it like this. In order to get fit, you need to train both your heart and your muscles. Strengthening the heart comes from cardio exercises, which involve running and getting your heart rate up, while strengthening your muscles relies on good old strength training in the gym. Over the past 7 days, I managed to squeeze in 2 running activities. I'm not an elite runner by any means. I like to keep my runs around 30 minutes or so, which is just enough to get your blood pumping and give you the benefits of running, a release of endorphins, a stronger heart, and all that good stuff. I also add 2 activities of soccer, more of a fun activity than strict workout for me because I really enjoy the sport. Soccer is not just a game. Through these 2 games, I managed to burn 1,000 calories each, so 2,000 calories, which is not something to be sniffed at. Soccer, in my opinion, is best of both worlds type of sport because it is fun, but it also gives you all the benefits of cardio exercise while letting you catch up and socialize with your friends. For the gym, I had a single training session this week, which was the infamous leg day, and I'll be sharing my training regimen file in the link. My idea with the gym sessions is to work on different primary muscle groups every week to keep my muscles guessing, which is found to be a very effective way to achieve progress and growth. So for the leg and core day, I did 6 different exercises, starting off with leg raises and sit-ups. Then I moved on to pull-ups, which is not strictly leg exercise, but I like pull-ups so much, so I try to add it in wherever I can. Then I moved on to squats, which is our classic bread and butter type of leg exercise, very great compound exercise. Then I moved on to lunges with kettlebells, probably the toughest exercise of the day. And then I wrapped it up with leg presses and leg curl exercises. Let's move on to the next section of our conversation, which is investing. No need to be said that investing our savings is really important just because of the elevated levels of inflation. The alternative is our hard-earned money keeps losing its purchasing power day after day, which makes investing in stocks a really good way to build wealth. My investing philosophy is slow and steady. You won't find any get-rich-quick schemes. I'll show you how to build a relatively low-drama investment portfolio and make your money work for you and watch compounding do its magic. If you don't want to bother with picking individual stocks, investing your money remains very important. What you can do is pick a well-diversified index fund like S&P 500 ETF and park your money there. And you're done. But if you're passionate about finance and would like to know how stocks are picked and analyzed, you can watch my videos and learn how it's done. I try to be transparent as much as possible. For the purposes of this video diary, I have started a Roth IRA account, which is a retirement account created by the US government to incentivize people to save money for their retirement. The deal here is you put up to $7,500 every year, which keeps increasing every year with the inflation. You won't be allowed to withdraw any money until you hit the retirement age, which is right about 60. At which point, you get to have all your investments and your capital gains tax-free, which is an unbelievable deal. So I wholeheartedly recommend you to take advantage of this incentive, assuming you live in the US. For investing, I use this fintech startup called M1 Finance, which makes building investment portfolio pies and automatically invest your savings on a regular basis really intuitive and easy. Or you can go with your favorite broker for that matter. As you can see, I already started this account about a year ago, and currently I have about $9,000 invested, and I've grouped my stocks into these sectors that makes it easier for me to keep track and update them as necessary. My game plan for this year is to invest at least $300 every 2 weeks, which works out about to the limit by the end of the year. And the reason I picked 2 weeks is because that's when my paycheck hits my account. And finally, let's move on to the latest section of my video diary, which is picking an individual stock and doing a deeper dive into it. Since this is my first video, I thought long about which stock I'm going to analyze and ended up with a simple option and one of my favorite stocks for the year, and that is Visa Inc. If you own a credit card or use the debit card, chances are you very well know what this company does. In order to determine if I want to add a stock into my investment portfolio, I need to answer the following questions. Starting off with whether it's a good business, followed by whether it's an expensive stock to own, because while it may be a good business, at this moment in time, it could be too expensive to buy. Then I also look at whether a company is a growth company or a value stock, which might explain some of the price evaluations sometimes. And finally, I put all these things together and assign a score and allocate some funds. So the first question is it a good business? This question can be answered by looking at a lot of different metrics. My primary two go-to metrics are return on invested capital and return on equity. These things tell us how efficiently this business uses investor capital. Visa gets 10 out of 10 score on these metrics because it boasts 30% plus on return on investment capital, while its return on equities is 50% plus, which is elite. Out of the two metrics, I tend to lean more on the former. The reason being, if the company has a lot of debt, its return on equity metric could be diluted. The second question to evaluate whether a business is good or not is look at its profitability. These can be measured on looking at things like operating margin and net income margin. Here, Visa gets maximum points, 10 out of 10, because it boasts 50% net income margin. And that is very rare. Now we've established that Visa is an excellent business. Let's see if it is expensive to buy. The fact that Visa is such a great business is not a secret. It is an established fact in the market, which can be seen by the fact that it is one of the largest companies in the world at the moment. Valuation metrics like enterprise value on EBIT and price to earnings ratios are relatively elevated. EV to EBIT ratio is 23, while its price to earnings ratio is at the higher end of the market average at 28. That's why I give 8 out of 10 on this criteria for this stock. Next logical thing to look at after evaluating company's expensiveness is looking at its growth. And this company has been putting up solid 10% plus sales growth every year pretty regularly. 10% plus is a really good number, and that is because the broader US economy grows only 3 to 4% in a good year. That is why I assigned 9 out of 10 in this evaluation criteria for Visa. While the stock may appear expensive, if the company continues to grow its sales and hopefully earnings at these high levels due to cumulative effect, pretty soon this stock will not be seen as expensive anymore. For example, at 10.5% growth rate, the company's sales will double in roughly 7 years using the rule of 72. Sticking with our Visa example, in 3 years' time, its enterprise value to EBIT ratio will drop to 17 from 23, which makes this stock relatively good value than initially thought. 3 years is not a long time, considering that I won't be touching my investment portfolio until I'm 60 anyways. I also look at things like how much debt the company has. This is usually not an issue for large, established, profitable companies. Visa gets 10 out of 10 in this criteria because its debt to earnings before interest and tax and depreciation is 0.9. Usually for these profitable firms, anything 3 is sustainable, so nothing more to say. Last but not least, and this is taking a little bit of a segue, I look at how much the CEO is getting paid compared to average employee at the firm. This is not a conventional analyst evaluation metric, but I do care about this metric personally. The reason is I don't like the firms that tend to pay their CEOs a lot of money while keeping their employees in minimum wage. And this is not an issue here with Visa, which paid its CEO handsomely $31 million. And that is to be expected from one of the most profitable and largest publicly traded companies in the world. While the median pay at Visa was 150K, which is pretty good. Putting all these things together, we arrive at 9.2 weighted average score for Visa, which is a really high score. To recap, to evaluate the stock, we looked at whether it was a good business, followed by how expensive it was. And we looked at the growth rate of the company and evaluate small other things like debt and the CEO pay. If I had $100 to invest, I'd put roughly $5 to $6 in Visa. And this concludes my first video diary. I hope to see you again next week. Take care.